These are the top 10 stocks I'm buying and why. Over the last few months, we've seen an unprecedented amount of growth in the growth and technology sectors, and especially the ones that are both in the growth and technology sector put together. I haven't done one of these videos in a while, and I wanted to share my top 10 picks as of right now. I actually wanted to record this video a couple weeks and months ago while I was building positions in these stocks, but don't worry, I'm still buying these companies regularly because I believe they still have room to grow. Some of these names I have covered on the channel before, and if you want to see a more detailed analysis, I'd be happy to make one on the ones I haven't covered on the channel. But let's jump into some of these stocks. The first one is kind of a surprising one. You might be thinking, well, they've been losing money, they've been losing customers, they've been losing average daily users, but I believe that their product lines is what's going to bring people back and using their app more and more frequently, and that is Robinhood stock. First and foremost, I have to recognize that they also laid off about 7% of their workforce, but I believe that that will help contribute to their positive earnings in the next couple of quarters. And we'll just have to wait and see how long it actually takes, but that's where my prediction lies. But here is why I like the stock. First and foremost, they just recently released a 401k and IRA match of 1%, which is more than any brokerage is doing ever. Now, of course, this isn't a huge amount of money, but for people like me who are self-employed that want to have an IRA or a 401k, it's a great option. And I think they're doing a great job by marketing it the way they have been. Now, I also think what they recently acquired, which was a credit card company with over 500,000 users waiting to get this credit card, is a move that's absolutely brilliant, and I feel like nobody is talking about it. I haven't even heard of this credit card company before they purchased it, but once I did and I looked at their website, I fell in love, and I'm planning to sign up for the card very soon. And both of these products together puts Robinhood in a very unique position to competing with major banks and much bigger financial institutions than they are currently. And because they're sticking to their mission by prioritizing new and up-and-coming products that other brokerages just don't have, makes me feel confident that because they're trading at such a low valuation right now, that they will turn things around and actually be very expensive in the short to medium term. Now, the next stock I want to talk about is a high risk, high value play. If things work out, it's great. If things don't work out, it's not a big loss in my opinion, and that is WeWork. Now, you might be wondering, why would you buy WeWork? They're going under, they're trading at cents on the dollar. If you look back historically, they're down 98, 99% and almost filed for bankruptcy. Why would I buy this stock? And here's why. The risk to reward ratio has gotten so juicy that it's hard to pass up. Now, if it gets delisted, boo-hoo, you maybe lost a few $100s or a few $1,000s depending on how risky you want to get. Now again, me, I'm in at about $1,000 as I'm making this video. And of course, it's not financial advice by any means, but based off of my observations, I think that this stock could double up, triple up, or even 10x if they are able to turn around profitability. And we'll have to see, because there are some bad news for the stock, and that is having to be bailed out by SoftBank, which is their main debt collector. But what's interesting is a lot of analysts were taking into account that they owed over $3 billion to SoftBank that needed to be repaid by 2025. And seeing how SoftBank has invested billions and billions of dollars already into the stock, they actually went in and restructured their loan to be $1 billion less, and 2, they don't need to repay it until 2027, which I think might give WeWork enough time to restructure things and even turn a profit. It's a big if, but if it works out, it would be a huge win for buying this stock under $1. The next one on the list is Palantir, and again, I've covered this on the channel a couple times back when it was first IPOing all the way up until now, and I think this is a great stock. Now, granted, I've been buying at a juicy price of $5, $7, $10 a share, and now it has gone up quite a bit since then, so the price doesn't seem as glamorous as these last two stocks, but I still think it's at a heavy discount if you are thinking long term, which you should be if you are an investor. Obviously, Palantir is the dominant player in AI tech, and it's easy to tell because they have the biggest clients on the board in terms of companies and also big government. And more recently, they've grown out of being a net negative company to an actual profitable company, at least recently, but we'll have to see if that continues on. And if it does, it might be really good news for Palantir. Now, this next one has been hit really hard, and if you know, I was buying Snapchat stock at $5 per share. I have a great story about that where my friend called me because we started buying Snap at around 12 bucks and he was down big at around $5 per share. And he was being told by his friends to sell out of the stock and reinvest his money. But guess what? I sat on the phone explaining to him why this stock was gonna rebound. And I even told him to maybe double down. But of course, again, not financial advice, but more so that's what I was doing. And I wanted to show him that sometimes doubling down pays off. And yes, it did. The stock obviously went really high. And I personally sold the stock in the $30 and $40 ranges. And now I'm reconsidering to purchase back my position. Here is why. Snapchat has a very unique position in competing with TikTok, YouTube Shorts, and Instagram Reels if they play their cards right because they have that lower age demographic. Not only that, but the fact that creators like David Dobrik are coming onto the platform because Snapchat is choosing to pay their creators a really good wage is a really good sign if you're thinking about it from an investment perspective on the creator front. Because if they're paying them really well, what happens when a Mr. Beast comes along and decides to start creating content specifically for Snapchat, a day in the life, behind the scenes, that type of stuff would push the stock to great new highs. Again, speculative, but it's definitely possible. And the reason why I'm buying it is because of the value for it being discounted right now. Again, it's definitely not a 100% bulletproof vision, but it most certainly could happen. And it's one of the only stocks that is in the social media space that hasn't performed like Meta or Google has. This next one is called CRISPR. Again, I've covered them on the channel, but the reason why I like this stock is because of the valuation and the fact that they are slowly becoming profitable. Now, who knows how long-term profitability will take, but they've made great progress in their tech. And I think we're only about a decade away from this technology actually scaling and being available to average people. Now, who knows if insurances will cover it or not, but I am excited by what they're bringing and that they're becoming closer and closer to profitability. This next one is Coinbase. Now, okay, it's already gone up 100%, and yes, I have sold my Coinbase stock, but if it comes down again, I will buy it back because we are getting closer and closer to the next bull run in Bitcoin, Ethereum, and the overall crypto market. And with regulation the way it is, depending on the way things go, we might start seeing progress being made on that front as well, and hopefully it's progressive. And if that sentiment is true, that we will see more progressive regulation where it protects people, but also at the same time letting the technology advance and evolve on its own without too much regulation, besides to keep the scammers and the Sam Bankman-Frieds at bay, I think Coinbase stock could really thrive in the next cycle. Now, this next one is a little bit of a hybrid because I wanted to include a few stocks in one, and that is Toyota and Ford. Now, a lot of people know these stocks as the competitors to Tesla, and for a long time, Tesla was their competitor, and now I think the roles have kind of switched. But what I love seeing is Toyota, with their new leaked battery tech, it should become a really good competitor to Tesla in terms of being one of the first companies to actually beat out Tesla on the battery front. Now, again, that's speculative, but their market cap for the amount of money that they make is actually pretty sweet. And Ford also falls in that same category, but the difference is they really need to sell and output more Ford Lightnings and probably add some better range before the Cybertruck comes along. And honestly, if those things don't pan out, I might dump both these stocks, but at least I'm happy to do so before it becomes a loss if those things, again, don't pan out. But I'm very hopeful that they will, and the numbers look really good in terms of the price of the stock to their actual profits. The next one on our list is Airbnb, and I love this stock. Hopefully you scoop some up at around $100 per share because the stock has been increasing lately. Now, I do think it might come down a little bit, but who knows? Always best to do your own research and dollar cost average in. But the reason why I like Airbnb is because they have been doing fantastic in terms of quarter after quarter revenues. I still think it will be a bumpy ride to like a $500 billion valuation, but that's only about a 5x away. So hopefully we see that very, very soon. And by soon, I mean 6 to 12 to 18 months, which is relatively soon in the investing space, especially for a company of this size. And another reason why I think it will do really well is because by 2028, the hospitality market should grow to pretty much $10 trillion. And I think Airbnb will have a huge part in that, especially with their ability to dominate in new markets and the experiences product as well. Next, we have a tiny player in comparison to all these stocks, and that is Cambium Networks. Now, you might have not heard of this stock unless you're like in telecommunications, but here's why I like the stock. First, they're down about 70% from their all-time highs. And for us number guys, that might mean nothing, or it might mean everything. And even if it were to climb 70%, it would still be considered somewhat undervalued. On top of all that, they have amazing technology for 5G and telecommunications at the same time as being one of the smallest players, meaning they have the underdog advantage. And that means good opportunity for investors. Do your own research, but based off their revenue, their market cap, how much they're down, and the products that they have, I really like this stock, especially as the world slowly switches over to 5G. Hopefully it can just get a little better in my area. This next stock I've talked about on the channel years ago, and it was one of the very first stocks I bought on my Robinhood account for $10 a share, which is way cheaper than it is now, and that is Square, or otherwise known as Block. This one barely made the list because of the way that they made customers out of thin air. It's a little bit sketchy for me, but that was a problem with Cash App, and Cash App has nothing to do with why I'm buying this stock personally. I'm buying it because it is the go-to payment processor for so many small businesses, and the fact that it's also down about 70% from all-time highs. All at the same time, bringing in half of its valuation in revenue on a yearly basis, which by most valuation standards is a really good sign that this stock might be undervalued. Don't take it from me. Always make sure to do your own research, and I hope you found this video helpful.